This is my favorite scalping strategy, and it's the one I use to take the short from right here, take the long from right here, take the short from right here, and take the long from right here. And as you can see, I am still holding some of these trades, but I do want to point out the fact that all 4 of these trade setups were given in advance over in my VIP Discord. The short, and then the long from the circled red level, and then the short setup again from 23,175, which literally played out to the exact dollar when we came up to 23,175, and then the short scalp from this morning, which I'm also currently still in right now. This is not a difficult strategy. However, it can be difficult to have the patience and the discipline to wait for a good entry, because this strategy is based purely off of planning things in advance. This is why I was able to give the setups in advance. The problem that a lot of people have when it comes to scalping this way is the trades don't necessarily come up every few minutes. The way I do this, the scalps that I look for, maybe we get 1 or 2 a day. On a good day, we might get 5 or 6 on a really good day. So here is what we need to do. And the key here, guys, is to keep it very, very simple. What we want to do is we want to identify areas of high and low on a chart. Now, a lot of people, when they first get into trading, they're always looking to catch the big move, right? Some people see my entries, like the long trade that I took from $16,300, and they're like, Jason, how did you know we were going to get such a big move? The truth is, guys, I had no idea. I was approaching this like a regular trade from the low to the high. Now, what we need to do is we need to approach the charts understanding that most of the time, price is going to be ranging sideways from a clearly defined low to a clearly defined high. We can just go back throughout the past half year of price action and see that price, for the most part, is ranging sideways. And there are some times where we break these sideways ranges and get a massive move down, but it's not long before we find ourselves in a very clearly defined sideways range. So if we can get into the habit of always coming to the charts and looking for and identifying these sideways ranges, we're going to have more success. Because if we just take a look at any old sideways range, for example, let's just take a look at this one right here. All right, I'm going to go ahead and take a look at this sideways range that we traded from September 22nd all the way to the end of October. And we just blindly long and short the highs and the lows of this sideways range. Look at this. We blindly long the low, we have a winning trade. We blindly short the high, we have a winning trade. We blindly short the high again, we have a winning trade. We blindly long the low, we have a winning trade. We blindly short the high and we get wrecked. But we have just won 4 out of 5 trades. So with nothing else, no other strategy, no confluence, no indicator, we have ourselves a 4 out of 5 win rate. Okay, that's pretty dang good. That's an 80% win rate. And we did nothing, okay? So now imagine if we can take the same principle and then layer on top of it some things that can help us be more successful, okay? What we are going to do is, once we identify the sideways range that price is trading in, we are simply going to say, okay, where is the high and where is the low? Now, what you're going to do, and what I like to do, when price gets some kind of an impulsive move, I always mark out the first high that price has put in, and I always mark out the first significant low that price has put in as well. Okay, so we can mark out this potentially as a significant low right down here. And we can mark this as a significant high right here. And we're just going to draw a line on the chart like this. Boop. And then again. Boop. Now we have clearly defined high and clearly defined low. And of course, this is going back in time, so we wouldn't really know what the price was going to look like. But let's say that we come back in time over here. This is what price would have looked like at the time. And then what we can simply do is we can just draw a box with that white line at the center, like this. Okay. And then we can draw another box with the white line at the center like this. And we can tell ourselves we are only going to look for a scalp trade using this strategy if price either comes to the upper box or to the lower box. Now, as we watch this price action play out, okay, let's see what happens here. We can see that price comes up to the top of the box and we get a move to the downside. What else happens? Price comes to the bottom of the box and we get ourselves a move to the upside. This is why I did give those 2 setups over here, because I was simply just looking for price to come to the high, okay? And then I was looking for price to come to the low of what would have been a box. I didn't actually have the box on my chart, but it's a very key level marking out this white line on the chart right down here at 22.4 is marking out the low of the box. These two lines right here that say CDW are marking out the low of the box, right? So that is what we're going to do. We're going to be looking for clearly defined highs and clearly defined lows, and then we need some kind of confirmation to get us into a trade. Now, this confirmation can come in various different ways. One of my favorite confirmations is called a divergence. What is a divergence? A divergence is where price and the oscillator are doing the opposite thing. So we can see right here, as we come to our high on market cipher B, we can see that our market cipher B is getting lower right here as the price is getting higher. This is called a bearish divergence. It kind of looks like if we just draw the hump, we have a really big hump right here and a really small hump right here. It looks like an upside down pair of butt cheeks, like this woman here, okay? We can see her butt cheeks are getting smaller as the price action down here is getting higher and higher as it comes up to her butt. Her butt is market cipher B. We've got the green dots. These should be red dots, getting lower as the price is getting higher, and that's where the money is, right? This is basically how we are going to approach this. And then when we come down to this lower box, for this, I was looking at a different confirmation called a absorption. Okay, I was looking for absorption. I was basically watching retail traders FOMO short, and I was watching the whales absorb them, and I just made a video about this, so go check it out. Now, once we have these highs and lows marked out, we can use other indicators to get us into trades within this range. One of my favorite tools to use is something like Fibonacci. So for example, when we take a Fibonacci from the high to the low right here, we can see that we have our 786 Fibonacci level coming in right around here. And this is where we get our second rejection. So we're coming up toward the high of the range. On our indicator, market cipher B, we are getting the bearish divergences as the price is getting higher right here. The momentum is getting lower right up to our key level. That is giving us the rejection. And then for the fourth trade, the scalp trade that I took this morning, we can see that we were coming right to the Fibonacci golden pocket retracement right here and got to bounce perfectly from this golden pocket 618. Okay, so the short from the 786 is one of the short setups that I gave in advance right over here because I knew that was the key level at the top of the range. And then the long today also from the golden pocket I gave in advance because I knew that we were coming down to a key level support near the low of the range, and I knew exactly what confirmations I was looking for. So really all we have to do is learn to identify areas within a sideways range where price is likely to get a bounce. And once we have those areas identified, we look for confirmations. Some of the best confirmations are market cipher B divergences. Now, if this is something that you want to learn, you can check out the course at jasoncaspertrading.com. This will give you the point A to point B comprehensive trading system so that you always know where you want to enter a trade, where your take profit should be, where your stop loss should be, how to use proper risk management, and more. If you want to join the community where I post the analysis every single day, the levels, as well as many other amazing traders posting their analysis, their thoughts on the market, their trade setups, you can go to patreon.com/Jason Casper. If you do want to trade on ByBit, guys, and take advantage of the short-term volatility, I do have some promotions here up to $30,000 in rewards, plus 0% limit fees over on ByBit. And again, please only sign up if you know what you're doing. Take a course or at least know what you're doing. Have a strategy. Use good risk management before you even think about trading on any exchange. But that is it, guys. This is just simplified trading right here. Buy low, sell high, wait for confirmations. Again, it's the discipline and the patience that wrecks most people. We saw millions of people get wrecked in this little range over here. We can go over here to exo charts and see millions of liquidations if we go ahead and turn on the wrecked right here. All these bubbles that we see here on this chart are people getting absolutely wrecked in this range because they didn't have the patience to wait for their setup. So that is it for today's video, guys. May you all be blessed in the name of Jesus the Messiah, Yeshua the Messiah. Even if you're not religious, I do pray you are very blessed, and I will see you all in the next video. Peace.